Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld. Welcome to Bloomberg Crypto. A risk-off mood in the markets at the moment, with Bitcoin sinking on the day, sitting around $106,000. In just a moment, we'll speak with Jack Mallers. He is the CEO of 21 Capital about the rise of companies with Bitcoin treasuries. And outside of today's U.S. budget vote, House Republicans aim to get the Senate's landmark stablecoin legislation to President Trump's desk for signature as soon as next week. We'll discuss the rapid growth of stablecoins, and we'll do that right now with Bloomberg managing editor of crypto, Mike Regan. Welcome, Mike. You think about stablecoins and you think about Circle because it's absolutely on fire in the equity market.
Yeah, well, like they say, timing's everything in markets, right? So Circle had the stablecoin legislation at its back right after its IPO, as well as just a really sort of euphoric stock market. So quite an amazing pop in the stock. That said, $40 billion market cap for a company that made 150-some million in earnings last year. It's got raised a lot of eyebrows. Yeah,
absolutely. And to that point, you think about analysts all over the map when it comes to their price targets. They're ranging as low as $80 to, as you can see, to the tune of $250. But speaking of stablecoins, governments and businesses are making moves to legitimize stablecoin usage, including in the United States. Here's Treasury Secretary Scott Bessent speaking about stablecoins just yesterday on Bloomberg Television.
I think stablecoins create an exciting new payment rail. And importantly, it will be a source of demand for the U.S. Treasury market. Because if you think about it, in terms of preference globally, would you rather have a private stablecoin that's backed by U.S. Treasuries with U.S. best practices regulation, or would you rather have an ECB or a PBOC, central bank digital currency, that if you write a mean the ex post, the government can turn off?
And let's stick with politics, because the Senate is voting right now on President Trump's big, beautiful bill. Let's get to the latest on Capitol Hill with Bloomberg's Kailey Leinz. Kailey, what is the up-to-the-minute latest?
Well, the vote is underway. It should be wrapping very quickly, Katie, and it does look like this will pass, with Vice President J.D. Vance casting the tie-breaking vote. That is what we have seen for the so-called wraparound perfecting amendment put forward by the budget chairman, Lindsey Graham, that passed 51-50 with J.D. Vance's vote, as did the substitute amendment that essentially replaced the entire text of the bill with the amended legislation. We don't have a full readout yet as to what exactly the amendments were, but it does seem that the Majority Leader, John Thune, was able to strike a deal to get Senator Lisa Murkowski of Alaska on board, knowing he could have only lost 3 votes, and he did indeed, it seems, lose 3 votes once again here on final passage. Tom Tillis of North Carolina, the Republican who, of course, just announced he is not seeking re-election, Senator Rand Paul of Kentucky, as well as Senator Susan Collins of Maine. Those look to be the 3 Republican no votes. And again, J.D. Vance right now is casting the tie-breaking vote as we speak. So this will be a final vote tally of 51-50. The Senate has just officially passed this massive tax and spending package. But of course, this does not mean that this entire legislative effort is now over. This has to go back to the House. And it's not clear the votes in the House will be there. Much will depend on the actual language of this legislation as it passed, whether it can appease fiscal conservatives, especially who are worried that spending cuts don't go deep enough. And I would point out that the House Rules Committee, which will have to take up this legislation first before we can get to a final floor vote in the House, was set to convene at noon, so just a few moments ago in the House. And that's where this battle will be fought next, Katie.
Absolutely. Just to reiterate that, the Senate passes Trump's tax bill. That tees it up for final passage in the House, as you say, Kailey. Vice President Vance, he actually broke the tie to pass the Senate's Trump tax bill there. So, like you said, this goes to the House now, and it is really a final countdown to that self-imposed deadline of July 4th. And again, just give us the stakes here, because that initial House bill was very narrow. Just 1 vote got it across the line, and we're still working to figure out the details of what exactly changed to get it over the line here.
Yeah, that's exactly right, Katie. And as those details become more apparent, we would expect that House members, especially more vocal fiscal conservatives, like, for example, Congressman Chip Roy of Texas, may be chiming in to give an indication as to whether or not this is a piece of legislation that can get the support. This work will really be in the hands now of the House Speaker, Mike Johnson, to convince any holdouts that passing the Senate measure as is the way to go. Otherwise, the alternative would be to take this to a so-called conference committee where the House and Senate will have to go back and forth to try to work out some kind of compromise. That very well would take things beyond the July 4th deadline that not just the Speaker and the Senate Majority Leader John Thune had said they wanted to stand by, but President Trump has been pretty vocal about wanting to have this on his desk by Independence Day, though he has previously suggested that isn't the end all. So the House is really going to be where we're going to be watching next, specifically those Freedom Caucus members, those fiscal conservatives who do like to take a hard line on policies such as this, knowing that the so-called SALT caucus has been largely appeased with the deal that was included in this Senate bill to keep the cap at $40,000 for 5 years for those making $500,000 and under. And as we consider as well that Republicans in the House may be considering another political element here, or at least a funding element. Elon Musk, of course, Katie, does not like this bill and threatened last night to essentially fund primary challenges to any incumbents who vote to raise the U.S. debt and deficit by this much. So that's another dynamic we'll be watching out for.
Absolutely. Still a lot of wood to chop here. That is Bloomberg's Kailey Leinz with the latest. Just to reiterate, the Senate has passed President Trump's tax bill. It now is teed up for final passage in the House. And it was Vice President J.D. Vance who broke the tie to pass the Senate version. We'll continue to follow along with that bill. But let's get back to the stablecoin boom, because firms are really moving in on territory that has long been dominated by the big card companies as they pitch merchants and consumers on lower fees and faster settlement times. Last year alone, U.S. businesses paid an estimated $187 billion in swipe fees, most of it via MasterCard and Visa systems. Now, stablecoins promise to make that toll much lower or even obsolete. Let's discuss the future of fintech with Delta Blockchain Fund founder and managing director Kavita Gupta joining us on set right now. So, Kavita, that is one view of the future. When you think about the role that stablecoins might play, where does your mind go when you think about what the future could hold?
It's a multi-trillion-dollar business, and it's just like I feel like there's going to be a lot of role reversal. In the sense, today when we think of a bank, we think of a bank thinking like giving you lending, saving account, current account. It's all going to be on stablecoin. So most of your fintech companies, most of your Venmos of the world, your PayPals of the world are actually going to be the bank the new generation going to know at all. Probably Bank of America, Wells Fargo, all these places are maybe known as for the mortgage securities, but nothing beyond that. And I think that also creates some very interesting dynamics when we think about stablecoin. So far, Federal Reserve has special rights on who can hold U.S. treasuries, right? Because that's the debt on the balance sheet. Now you're thinking about so many private companies owning stablecoins, so they have to have U.S. treasuries. So you have companies like Tethers and so many interesting companies across China and Russia and all over the world owning trillions of dollars of those U.S. Treasury reserves. How does that look like for the U.S. government? And how does all those Federal Reserve's restrictions works around it? I recently was talking to a friend of mine from Federal Reserve who actually told me that Tether has more U.S. Treasury Federal Reserve than Canada and Mexico combined. And what does that mean? I mean, for the stablecoin adoption, it's amazing. That's the future. But from the government and about the free flow restrictions on the Treasury bills, that's something to think about.
You know, Kavita, at the same time, I hear of so many companies, fintechs and banks either considering or planning to launch their own stablecoin. And I wonder where you see that going. How many different brands of stablecoins do we need, or where they sort of compete against each other until we just have two or three dominant ones?
I feel like over time, it will not be whether it's Circle stablecoin, it's Tether, it's PayPal stablecoin. It's just going to be a platform and you're just making a digital payment. Of course, if you have to send it on a particular platform, like Robinhood, for an example. Robinhood just announced that with Kraken, they are issuing their own stablecoin right now in Europe. Over time, if I'm just using Robinhood to Robinhood, it's just going to be that stablecoin. It doesn't matter.
Purpose-built, yeah.
Yeah. So it's going to be platform-based, and it's going to be technology or the country do you really live in and what's acceptable. Of course, I feel like Tether will continue to be a very native for crypto users, maybe Circle also, but on the institutional level, it's just going to become a network of Zelle, and that's how the future is going to be.
Well, when we talk about the future, I want to talk a little bit more about how crypto infiltrates the equity market, because watching Circle shares has just been stunning. Since their IPO, I see them up about 480%, and consensus seems to be that this is going to coax some of those other crypto companies to come into the public equity markets.
100%. We are seeing two big strategies right now. One is companies going IPO. We are expecting Kraken early next year. We are expecting FalconX, Anchorage, bunch of them. At the same time, the second one, which is getting very fascinated, is a lot of existing IPO companies in NASDAQ and NYSE are taken over by the crypto strategies. And so we saw Upexi with Solana strategy, we saw SBAT with Ethereum strategy, and we continue to see a lot of Ton, BitSensor, Hyperliquid, multi-million-dollar, $100 to $500 million announcements, and Bitcoin, of course, based on the yield. Now, what is very interesting, which we have to watch, is that the only way for the markets, especially institutional endowments, to actually hold and have exposure to crypto? Or is it just another way of token up and down? Which is going to be fascinating for the crypto native people too, because we have always been asked, there is pumping and dumping in the crypto world. Let's see how does it happen in the stock market world.
Absolutely. That will certainly be fun to watch develop. Kavita, it's always great to see you. Appreciate your time. That is Delta Blockchain Fund's Kavita Gupta. Meanwhile, let me just bring you back to those recent political headlines that crossed at the top of the hour. In the Senate, Vice President J.D. Vance broke a tie to pass Trump's tax bill. And we also learned that here in New York City, Zohran Mamdani has won the mayor Democratic primary. He wins the third round of choice voting by a 12-point margin over Andrew Cuomo. Now, coming up on Bloomberg Crypto next, Jack Mallers joins us. You don't want to miss that conversation. This is Bloomberg. Well, the Bitcoin Treasury play is really paying off for Michael Saylor's strategy. The firm is expected to register an unrealized gain of about $14 billion in the second quarter due to a rebound in Bitcoin's price and a recent accounting change. Now, there's many other firms, such as 21 Capital, building their own crypto treasuries. And to that point, let's bring in CEO Jack Mallers. His firm has the backing of Cantor Fitzgerald, Tether, and SoftBank to be a, quote, pure play Bitcoin firm. Jack, it's great to have you with us. So let's start with the logistics here. Can you give us an update on the status of the SPAC?
Yes, it's progressing well. We're hopeful to be approved shortly and list the stock on a stock exchange under the ticker XXI. So these things take time. Obviously, we're dealing with the SEC, but I love the attitude of the new administration, and we're hopeful and excited.
Yeah, Jack, I wonder what is the plan once the SPAC is approved and starts trading as far as raising capital? You know, obviously, Michael Saylor and Strategy have been very creative, basically inventing their own sort of securities to sell and sort of lever up to buy Bitcoin. What is 21 Capital's strategy once it is up and running in the stock market?
To buy as much Bitcoin as we possibly can. We've been successful with convertible bonds to date. That's a fixed income market we'll look to continue to tap. We're excited to have our stock actually listed on a stock exchange, and we'll have an ATM program as well. And then there's a vast array of other options that we're very excited about, and we have an operating company. I think one of the main differentiators between 21 and some of the other businesses is that we plan to build lots of cash flow within the industry itself. I mean, Tether and I come with a vast amount of operating experience. We've built big cash flows within this industry. I mean, Tether specifically. And so I think we're going to be buying Bitcoin with cash flow. I think we're going to use convertible bonds. I think we're going to use the ATM and some other instruments that effectively we're a capital allocator. Take dollars and plug them into an asset that is pristine where capital can live safely.
You know, Jack, and obviously Strategy has become famous because by levering up that way with convertible bonds, you know, they're able to trade at quite a big premium to the market value of the Bitcoin that they actually hold. Is that sort of the ambition of 21 Capital as well? And, you know, are you worried about the Jim Chanoses of the world coming in and, and starting to short you because of that?
No, you know what? Listen, I think there's a bit of a misunderstanding here. Let's take a look at Berkshire Hathaway. Warren Buffett, which we all adore as one of the greatest investors of all time, he would raise capital similarly. And his job was to allocate that capital efficiently in businesses. And so as long as he was performing, he was outperforming the dilution, then on a per share basis, he's accruing value to his shareholders. And so what these Bitcoin companies are innovating on is if you're able to take capital that historically is extremely risky. I mean, the dollar's the best performing currency in the history of, the last century, and it's lost 99.5% of its value. And so you have an asset that's bleeding value. And what Bitcoiners have realized is you can take dollars and plug it in risk-free to something that's outperforming everything else. Where Warren Buffett, there's execution risk there. Is he going to pick the right company? Is he going to pick the right investment? What's the long-term viability of these businesses? Is Coca-Cola still going to be valuable and people are going to be drinking it in 100 years? Bitcoin can last thousands of years. It's safe and there's no counterparty risk. And so the way I think about these businesses is we're efficient capital allocators where we're taking dead capital like a fiat currency that's being actively debased, and we're moving it over to an efficient place for shareholders. So then the way these businesses are going to be valued is what's the leadership team like? How are you valuing their ability to execute? And how are you valuing their ability to accrue capital and raise money? And that's where we think at 21, we are very confident in our ability to serve the capital markets because of our experience in this industry, because of SoftBank and Tether, the amount of capital backing us, the amount of capital already on our balance sheet, and what we've already done in this space over the last 15 years within Bitcoin. So that's how I view it. I think we're capital allocators like a Berkshire Hathaway, but maybe the digital version.
Well, Jack, as you mentioned, there's several of these businesses out there, these Bitcoin treasury companies, and it was around 5 years ago at this point that Michael Saylor really pioneered the model. We actually spoke to him on this program a couple of weeks ago, and I asked him whether he views companies such as yourselves as competition. His answer was no, pretty much. And I'm curious what the relationship looks like there. Do you guys have a group chat? Do you talk at all? What does that actually feel like?
No, the internet loves to try and pin me against Saylor, and the internet should know that we're friends. I actually just had dinner with him a few weeks ago in Prague. Yeah, I mean, listen, Bitcoin is not a winner-take-all market. We're talking about, there's about $900 trillion worth of stuff us humans own. Real estate, equities, currency, sovereign debt, art, collectibles, precious metals. About half of that we're using as a savings account. We've monetized these assets. So you don't own the $10 million art painting to hang on your wall so your toddler can throw spaghetti on it and ruin it. You own it because you think you can sell it in the future for more than $10 million. And so that means that, humans are trying to persist, save, and bring with them in the future about $400 to $500 trillion worth of wealth. That's what Bitcoin is going after. It's a better way for humans to create value for those around them and then take that value with them tomorrow. Okay. And so there's plenty of room for all of us to win. We're all on the same team. This is a tiny industry. So if it's a $500 trillion industry, it's $2 trillion today. I mean, Saylor and I have been on the same team. We'll continue to be on the same team. So I don't think it benefits anyone to pin each other, against each other. And I don't know. We enjoy steaks when we see each other, and we have good laughs, and we strategize.
All right, there you have it. Before we let you go, Jack, of course, we have an eye on D.C. today. And with that in mind, is there anything that you would like to see specifically when it comes to crypto legislation?
The Bitcoin Act.
Okay.
As an American, I would love to see Senator Lummis's bill pass. I think it's strategically important that we not only support this industry and this asset class, but we own it.
All right.
I think going back to our foundings as a country and how important we've been in the gold market, I think having zero Bitcoin or a rounding error amount is a strategic mistake, and the country gets that. President Trump gets that, and I'd like to see that pass.
All right, that's a good place to leave it. Hope to speak to you again soon. That is 21 CEO Jack Mallers. Now, coming up, it's crypto ETF summer. A new fund tracking Solana could be the start of a flurry of crypto ETFs coming this month. This is Bloomberg. A new fund has been cleared to launch and will allow investors to earn rewards by deploying Solana tokens to validate blockchain transactions. Now, this ETF's launch is seen as a significant step in the integration of the crypto economy with public markets and is expected to be followed by a wave of crypto ETF launches in the coming months. Let's discuss with Bloomberg Intelligence ETF analyst James Seyffart. So James, put this into context for us. We're getting this ETF. I believe it crosses the line tomorrow. Should we be looking at IBIT levels here? What's going on?
Yeah, I mean, this isn't going to be the level of a success that IBIT saw. I mean, IBIT's over $70 billion in assets right now, and it's just a year and a half old. This is not going to be that. Though I do think this is going to be a successful category. Solana ETFs are likely to be successful. This product isn't the simplest, easiest way of getting exposure, but it is a way to get exposure earlier than any of their competitors for Rex Osprey. So that's a big win for them. And it just shows the SEC is moving forward towards this direction of allowing staking exposure, allowing exposure to these other digital assets, which is something that us and BI have been saying is going to happen in the second half of this year, basically since the start of this year. So yeah, things are moving in the right direction as far as we're concerned.
James, one thing that stuck out to me with this ETF was the expense ratio, 75 basis points. Seems pretty high. I mean, does that relate to this being a more difficult ETF to manage with the staking and whatnot?
Yeah, I think that's part of it. Part of it is also they're first, and the way that they're getting out first is by using a very unique regulatory and legal workarounds essentially to get this through. They're using a Cayman subsidiary. The fund is going to be structured as a C corporation, which is pretty rare in the ETF world, but it does happen mostly for MLP ETFs. It's not going to hold solely spot Solana. It's also going to hold at least 40% in other ETFs listed in places like Canada and Europe. So it's very unique. It's going to be first. And also, unlike the Bitcoin ETFs that we talked about before, those were strict, pure exposure to spot Bitcoin or spot exposure to Ethereum that we've had. These are a little more convoluted, and it's a little more further down on the spectrum. So theoretically, you might be able to charge a little more for these digital assets further down on the chain.
James, we only have a minute left, but talk to us about the significance of being first across the line here. That's something we didn't get to see when it came to the spot Bitcoin ETFs. They all launched at once. What do you think that the first mover advantage here will look like?
Yeah, it wasn't just spot Bitcoin. They did the same thing with Ethereum. There's actually a letter from a bunch of CEOs in the space saying the SEC needs to stop doing this. So it's very interesting that we're actually going to see another first mover advantage. But the way I see this is similar to the way that I saw the Bitcoin futures ETF launch. That launched over a year before we got spot Bitcoin. First mover advantage was massive. That product got to over $1 billion in assets. I don't think this space will get to $1 billion in assets that quickly, but it's still very critical. It's also the case that the Bitcoin futures product wasn't the be-all, end-all for the exposure that people ultimately wanted in the space. They're probably going to want pure spot exposure to the underlying asset with staking. Right. And however these issuers are going to figure that out will be the way that it wins over the long term. But this could be the only thing in the market for the foreseeable future. All
right, well, we will keep our eyes peeled for this launch. James, really great to break it down with you. That is James Seyffart of Bloomberg Intelligence. And that's all for Bloomberg Crypto this week. We'll see you again next week. I'm Katie Greifeld. This is Bloomberg.